Revenue is the total income a business earns from its normal operations before any expenses are deducted. It shows how much money is coming into the business from selling goods, providing services, or other business activities. Revenue is often called the top line because it appears at the top of the income statement. The most common type is operating revenue. This is money earned from the company's main business activity. For example, a bakery earns operating revenue when it sells bread, cakes, and coffee. A software company earns operating revenue when it sells subscriptions or licenses. Since this is the core source of income, it is usually the most important type of revenue for measuring business performance. Another type is non-operating revenue. This comes from activities not directly related to the main business. For example, if a clothing store earns interest from a savings account, that interest is non-operating revenue. If a company sells an old delivery van or unused equipment, the money received may also count as non-operating revenue. This type is often smaller and less regular than operating revenue. There is also recurring revenue, which is income that comes in repeatedly over time. This is common in subscription-based businesses. For example, a streaming service earns monthly recurring revenue from subscribers. A gym that collects monthly membership fees also has recurring revenue. Businesses like this value recurring revenue because it is more predictable. In contrast, one-time revenue happens from a single sale or event. For example, a furniture store may earn one-time revenue from selling a sofa. A consultant may receive a one-time payment for a project. This type can be useful, but it is less predictable than recurring revenue. Businesses may also look at gross revenue and net revenue. Gross revenue is the total amount earned before deductions. For example, if an online store sells $10,000 worth of products, that is gross revenue. Net revenue is what remains after returns, discounts, and allowances are removed. If customers return $1,000 worth of products, the net revenue would be $9,000. Understanding the different types of revenue helps businesses track performance, plan growth, and make better decisions. It also helps investors and managers see where the money is really coming from and how stable that income may be.